Yes, 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 yes. Let's turn this down. What's going on? Let's turn this down. What's up, everyone? Good morning. Let's make sure we're doing the do. Hopefully everybody can hear me just fine. It's saying the stream is running slow on YouTube. So let me know you can hear me. Oh, there it goes. All right. I'm only running with one monitor today, so I'm out of my main office. So we're here in New Orleans. So Sunday service, what my goal is to take you through the beginning of the money flow and, a basic overview. So during the week, I try to do more, looking at actual stocks and what they're doing. But on Sunday, we call it Sunday service. The idea is, the basics, man. Get you through the basics. A lot of people think the money flow is as simple as, a couple moving averages and, you got it. And unfortunately, it just doesn't work like that. Let's, we'll leave comments on for a minute. What's up, Steven? Let some people come in here. We're over 100. And what I like to do on Sunday is take you back to the beginning. And what you're looking at here is just a rudimentary chart, And this is how the chart gives us the window into the movement of price. If you look at these are bar charts, and we could zoom in on these. We could make these bigger and bigger. And all you're looking at here is each one of these lines. A red one means it opened higher than it closed. So when you see a red candle or a red bar, they're basically telling you the same thing. It means price opened higher than it closed. So it opened, price went down and closed. And you'll see on a bar there's these little ticks. Tick to the left is where it opens, tick to the right is where it closes. So if you look over here, you'll see a little tick here to the left, and then up here at the top you see a tick to the right. Well, that's a opens here, moved higher, and then closed. Right? And so the money flow is comprised of, let me turn these comments up. I'm going to turn comments off on Instagram so I can focus. So the money flow is comprised of all of these individual bars put together. Any one day of its own doesn't really mean much. Let's see. Good morning, Sunday service session. Eyes open. There we go. So any one day is just one day inside of the movement that we're going to talk about. And a lot of people have written on these movements. Traditionally it was taught that price moved basically in three stages, that price either went sideways, up, or down. And that's kind of true in the sense that it is either going sideways and that's sideways and then up and then that's down. And this sideways down here and this sideways up here, they're both sideways. But really, that doesn't tell the complete story of this price movement that we're going to get into. And I first came across this from a guy named Stan Weinstein. Now, a guy named Dr. Elder wrote about it, but his strategy, that's one of the first guys that helped me out in trading. And Elder's the guy that really told me I needed to put together some sort of systematic way of looking at everything. And Elder's the first one that really turned me on to the right way to begin to use these moving averages and all these indicators you're going to see in conjunction together in steps, almost like you're using it as a recipe. Now, if you've been trading for a long time, that's going to seem obvious. You're going to be like, yeah, duh. But not everybody knows that, man. And so the point here of Sunday service is to bring it all together. In order for the money flow, most things are taking place within 4 or 5 of these bars, and we're going to talk about that, and I call that a box. And you're going to see these boxes. And the more and more you do this, now this is an index of the Dow Jones, and it's harder to do this on an index, but I want you to see these little zones of consolidation. And as you see these zones of consolidation, it's going to get clearer and clearer and clearer to you, and you're going to be able to spot these. Now, the ones that matter the most are the ones that are at the tops and the ones that are at the bottoms. Now, that's easy to say looking back, but what we're trying to do is to interpret that going forward, but it's not even to predict price. Sometimes people think we're trying to predict price, and I'm not. And I say it all the time. People who think they know where price are going are crazy, delusional, or selling you something. It's all ego-based. You have no idea. And I know there's people that think they have ideas. Oh, I know this is going up. I know this is going down. You don't know that. And the sooner you can accept that, the easier this game gets, because you're dealing with one, probabilities, and two, you're dealing with uncertainties. And there's events that could happen Monday that you didn't know about on Saturday, or next week, or the week after. Or you don't know about embezzlements or fraud, or viruses, or wars, or interest rate rises. So the idea that anybody knows where anything is going is nonsense. So the sooner we can remove that, in the sense of like playing cards. You can be I was texting with someone yesterday, and they're played professional poker. And he said, well, it's one of the few games in the world, or one of the few careers that you can do everything you're supposed to do and do it perfect and still lose. And I said, well, that's not true. So is stock trading. You can do what you're supposed to do and it still lose, because of the randomness of uncertainty events and data. And so as I began to try to quantify chaos, which is what this is, I began, and if you go on, what is this, on page 10 of the money flow in my newsletter, thepetersreport.com, you'll see where I simplify the money flow. But within this simplification, man, is a lot of information, even though it's made simple here for you, okay? There's a lot more to this, okay? And you say, like, what else might be? Well, stock selection is one. Selecting good stocks. If you select shitty stocks and you try to run the money flow on them, it's going to work. But if you don't have good stocks, you're not going to catch big runs. You're not going to catch, if you catch one that's in a runaway to the downside, yeah, you're going to have a little money flow action, but it's just going to keep going down, 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 down. So stock selection plays in heavily into into the money flow. Let's go back here. So we've got stock selection, we got the execution on the stocks, and man, this one keeps messing me up here. And that's what this is trying to help us do. And if you notice at the top, it says the market goes up 71% of the time. Now, maybe it's 69, maybe it's 68, maybe it's 74. It changes from time to time. But the point is that generally, assets appreciate. A couple reasons. One is inflation. I don't know if you've noticed this, but ketchup costs more than it did last year. I don't know if you've noticed this, but insurance costs more than it did last year. I don't know if you've noticed this, but the price of houses and cars cost more. Now, some things don't. Some things are like oil is a commodity. Commodity is a different game. Commodities are different. Commodities go up and down based on supply and demand. But goods and services, because the input component parts go up and the cost of wages go up and the cost, everything goes up over time. Well, the same effect happens to the stock market. And so as we're looking at the Dow Jones here, this is on a daily, right? And just on a daily chart, most of the time, not all the time, but most of the time, if you took a line and you just found the lowest low on the chart and you connected it to the next lowest low and you just drew it, you're going to notice that there's this slight move to the upside, that it slowly grinds higher. Now, on a daily, that's not always going to be true. I'm only going back here about 5 or 6 months, but let's say if we took this to a weekly. Now, what are you going to see? We could do the same thing. Just go to the chart, find the absolute lowest low on the chart, and then find the highest high, right? And then connect them. What are you going to see? This gradual push higher. Now, each one of these bars is 1 week. So there's Monday, and then you have Tuesday, Wednesday, Thursday, Friday. There's Friday. So the open is the Monday and the close is the Friday. And so that bar represents, that was an entire week down, and then there was an entire week up. And then what? You just see this grind, right? Well, if we back this up to a monthly, This is super important to understand. If you back this up to a monthly, there's the year 2021, 2020, 2019, 2018, 2017, and what are you seeing? You're seeing this gradual climb of prices going higher, right? That's crucial, because the moment you don't believe that, then you can't do the money flow. You're actually out of the money flow, because at the core of the money flow is that over time prices go up. Now, if you were to go to YouTube, you'll hear people tell you something different. You'll go look. I mean, my entire adult life, Robert Kiyosaki, who wrote Rich Dad, Poor Dad, who everybody thinks is an amazing book, which I guess, I don't know why. It's common sense. If you own a business and you make a lot of money, you can get rich. No shit. Like, I don't know. I don't know why that book turned a lot of people onto the idea. I'm not quite sure what's so revolutionary about it, but they've been calling for a stock market crash my entire adult life, and yet it just goes up. And if you go on YouTube any given time, you're going to see people doing that, influencers. But yet, if we look at actual price, the actual movement of price, you're going to see that it moves higher. And if I took that back all the way to 1850, you're going to see the same pattern play out all the way to 1950 or 1850. Now, if you notice when we're looking at the money flow, these stages, now you can call the stages different times, but we have to start with the concept that over time prices move up. That doesn't mean every single company all the time always moves up, right? We talked about that. You could have a bad company. You could have companies that are awful. And so that's why we have to use a little bit of intelligence, right? But narrowing down your search to the top companies in the world is relatively easy. You know PayPal, you know Amazon, you know Tesla, you know Square, you know, like I can just go on and on, Microsoft, Intel, like you can just go on and on and on and on and on and on. And so sometimes people say, well, how do you pick stocks? And it's like, I don't know, open your fucking eyes. That's one way. Like, look at the car to your left, look at the car to your right, look at the soup that you're eating, look at the watch you're wearing, look at like it's everywhere. And every grocery store you walk in, there's 40 or 50 ticker symbols, you know? And so as you begin to open your eyes to the movement of price, you're going to begin to see them everywhere. Delivery trucks pull up. It's UPS, it's FedEx, it's this, it's that, it's DHL, it's a Deere truck or Deere tractors. Well, I live in the Midwest. I don't get out much. Well, look around. There's an electrical company providing electricity to your house, right? So maybe your electrical company is Duke, and so you can begin to plot that. My point being is that it's everywhere. And so as we begin to look and to watch, you're going to see all of these things move. And if you're just looking at this chart here, it may appear to be chaos. And you're like, wow, that looks chaotic, right? And it kind of is. And if you've ever taken my Getting Started with Stock Charts course, one of the things that I teach is there's a whole video there on these pivot points. These help you begin to make order out of chaos. And if you notice what I'm doing, I'm looking at these swings. And I'm not going to draw this, but you need to see it so it's clear. Swing down, price stops, right? Swing up, price stops. Swing down, price stops, right? Swing up, price stops. And these pivot points begin to help us structure. That's all it's doing. We're bringing structure to this chaos, right? And as you begin to do this, and at first you may want to actually draw these, but as you get going, you don't need to draw these. You can see them, but as you're doing it, it can help you pinpoint. Sometimes people say, well, I don't understand how to do the box. And it's like, yeah, because you're not doing the pivot points. So if you take your pivot points and you draw crossways, what do you start seeing forming? A box, right? You had a box kind of starting here, and what happened? Price kept going, right? What do you have over here? You have a box forming. And so the pivot points, these points of where price stops and then reverts to the other way, doesn't mean a trend is up or going up or down or anything. It's just helping you build out and structure price. So right now, you notice there's no indicators on here. Now, this is an index, and it's made up of 30 stocks. If we get down into the individual stocks, then this gets a little clearer. So let's look at what's a recent one we've had that's done well. Let's see. All right, let's look at the XLU. Now let's look at Gush. We've had that one killing it. So as we look at Gush, right, and I start drawing in these little pivot points, and they're just, go back as far as you want to go, right? These are just little points where price stops and then goes. Can you count this one? Yeah, I guess so, but that's not really one, and we can just stick with the big obvious ones, right? And as we begin to draw these out, it's probably going to be that one. What are you seeing? A form up here. Well, if we take these across, what are we starting to see? That box comes in pretty clear, right? So now we're seeing this price movement of price moving sideways. It tried to get out of the box, came back into the box. That's pretty bearish right there, actually. And so as you begin to look at it, you're seeing this big move up and then price moving over. And what you're seeing there is constructing what I call the money flow. And other people call it different things. I like to make up my own names. It's the stages. They tend to call stage 1 accumulation. I don't really refer to it that way a lot. I usually refer to it as it's building a box, meaning price is going sideways. When it breaks out, and the line you see here going up and down, that's price, and it doesn't go straight up. It runs up, pulls back, runs up, pulls back, runs up, pulls back, runs up, pulls back. Yeah, it's extra bearish. You'll see what I'm talking about in just a second. So you got to remember, it's a yin and a yang thing. So one of the things that's the most bullish is for price to go down, break a box, and come back up into the box. That's super bullish. Well, everything is opposite. Same to the top. A stage 3, where price builds a base on the top side, is the same as a stage 1. The only difference is the stage 3 came after a run up and the stage 4 came after a run down. And that's what prices do. They run up and they run down. And when they stop, whether it be at the top or at the bottom, the same activity is happening, whether it be the sun or the moon, man. It's just rotating, right? And so a lot of times when people look at this pattern, you're new to the money flow. You're an immature trader. Not in a sense of you're not an old person. You don't have time in the saddle, so to speak. You might think of this as a linear price movement, and that's not what it is. You're going to see it moving in a sense where over time, remember we talked about 70% of the time stocks go up. Now this is a commodity, so that gets a little different, okay? Commodities, REITs, and high yielding instruments get a little bit different because the money comes out of them, okay? You can't treat an oil play is not Roku. It's not Chipotle's, meaning Exxon's not going to 500. It's not happening because they deal in commodities. When commodity prices go really high, they pump a whole bunch more oil because they get greedy, and then that brings the price down. When the price of gold rockets, they start mining more gold. That's what happens, and so there's this pressure to bring it back down. That's not the same as a Chipotle's or a PayPal or a Square or a Roku, where they don't have that pressure on them, okay? So when you get into commodities, the game gets a little bit different. Same in high-yielding stocks like mortgage REITs. I meet a lot of young people, and they start buying mortgage REITs. That's fine if you're putting chunks of money in, but you got to understand a mortgage REIT is not going to double. It's not going up 600%. Now, it will over time as it pays you because the value is coming out of the money. So anything paying a 10%, 20% dividend yield, all of the value that could take the price higher is coming out, meaning the value is not staying at the company. They're giving it to you. So if you went to your bank account and every week you took $100 out, when you get there next month, you don't have as much money in there, right? If you left the money in there, the value of the account would go higher and higher. That's the effect you see on a Roku, on a Chipotle's, on that kind of stock. But as they start giving you money, and if you're in these high yielders and they're giving you a bunch of money, the price is never going to go high because they keep giving the money to the shareholders. That's something I think a lot of people don't understand. But as we're looking at this and that pattern, we can look back over time, and I'll just draw these in real fast. My man asked about being bearish and bullish. I'm fixing to show you that. Right, and now we're seeing a box up here. But watch this. So we're just backing these up. And as we go from a stage 1 to, then we go 3, stage 4 decline, and price started going sideways, right? I don't have indicators on here. We don't need them on here. But as price, look what happens. It breaks the box. When it comes right back up into the box, that's super bullish, man. And then look what happens. Price runs. So, and it's the same to the ups. So up here, look, you had price going sideways. Price tried to break out. It couldn't do it. It came back into the box. That's actually quite bearish. How far does it go down? I don't know. And that's the thing I was saying in the beginning. Anybody you meet who claims to know what stocks are, you're talking to a fucking idiot, man. They don't know shit. They don't know where it's going, how far it's going, when it's going to. They don't know, man. And so if you meet people talking with certainty like that, either you're the fool or they're the fool. Because you can't know, you just can't. But what we can know is these basic, where we at? This basic concept that the stock market goes up as much as 71% of the time. The problem is it's not a straight line. Price can only do one of 3 things. It can move up, it can move down, it can move sideways. I believe that it does this in 4 stages. By identifying the stage, we can better allocate our buys to take advantage of sell-offs, which are stage 4 declines, right? Price moving down, and maximize profits or maximize price increases to take advantage of stage 3s. So as we look at Gush, and we're getting in way down here, now let's put some indicators on here. Right? So as we're looking at Gush, and now we begin to put our indicators on here, you can see what happens. It begins to make price make more sense. And the flow of price becomes a little more obvious too. So all the indicators are doing, you don't need them. And sometimes I know when you're new, you kind of get hung up. Oh, price is barely touched. Man, don't do that. That's not the point of the indicator. The point of the indicators isn't for you to watch, and when 2 cents below the 5, that's not what it's doing. It's a scope on a rifle. It's helping you see the big fucking picture. That's what it's trying to do. It's trying to help you, pinpoint, but just to bring clarity to this movement. And so we have to have a way of defining, what is a stage 1? How do you differentiate? Man, that's what the fuck I am talking about, bro. All right, we got to turn off comments now. People are too stupid. All right, so just listen, okay? That's what we're going through. That's the whole point of this. It's the whole point of the money flow, man. So as you're watching price move, let's make sure YouTube's still good. Yeah, we're still there. As you're watching price move, every day you're asking yourself, what stage is this in? And we go through some basics. We know this. If price is above this green line, this is a 20-day simple moving average. If price is above it, that's bullish. Okay? Just a general term, it's bullish. And if it's bullish, then I'm assuming we're moving into a stage 2. Now, not just that one thing, but that's one thing that we're looking at, okay? So I go down here to my checklist, and it says the money flow basic trading technical indicator. We got a 5-day exponential moving average. If you don't know what those are, these moving averages and stuff, get my stock course. I have several, but I have one called Getting Started with Stock Charts, okay? And the stock charts will help break all this down. It's actually pretty good. It should be like $500, but it's like $40. Matter of fact, it's so much information, I highly doubt your brain can even comprehend it. So as we go through, it's a 5-day exponential, 10-day exponential, and they're exponential. So on my chart, you're going to see them dotted. Some of you guys have straight, solid lines. That's because you're doing it wrong. 20-day is a simple, exponential, simple. And then we got the RSI on there. We're looking for support and resistance. We've got the MACD. A lot of people are using the MACD wrong. This here is for momentum. That's all I'm looking for on this is momentum, okay? And then if you've read my book, The Money Flow, you know I have TSI, stochastics, a few other things, but we don't need to get too heavy in that. So these technical indicators, they're just mathematical calculations based on price, volume, open interest, to try to give you basically what price is already telling you. But the single most important thing is price. And whenever I start going through the indicators and stuff, people will filter it. You're going to drag shit you've learned before. You're going to be like, oh, what about volume? And I'll say, don't really give a shit about volume. And that'll confuse people. And it's like, well, first off, I'm not day trading. So it doesn't matter. If a stock goes up on low volume, fine. If it goes down on low volume, fine. It doesn't matter. Fibonacci ratio, none of that shit matters. Elliott waves and none of that matters. All I'm looking for is price moving. And as you begin to see this, I want you to see how this looks and tell me you're not seeing this as price moves. Okay? Let's save this. Now look at this. I don't know how to, it couldn't be any clearer. This is like children could trade this, man. The only difference is you got to watch it every day. Like this is so easy. This breakout in oil was so easy. And so I think we're up like 70, 80% on this right here. On this one trade right here. 70, 80%. And we're still in the trade. And so part of the art of trading is knowing how to downsize a trade, how to increase your weighting in a trade, right? Having multiple trades, so managing the portfolio within the idea of the money flow. Sometimes people think trading just means, well, I'm in, I'm out, I'm in and out. It could mean that. That's not what it means for me. And so as I'm watching all of these things, remember what I talked about when price breaks above the 20, that's super bullish, right? Well, guess what? It's also back in a box. There was a previous box here, very bullish. So again, we got another bullish thing. The 5-day, 10-day have crossed the 20. And so you have all the moving averages crossing. In these zones where moving averages cross is where you get price changes. So you're looking for two things. Moving averages are crossing each other, whether to the upside or the downside. And those are moments of trend change. And so you won't see the trend change until the 5-day, 10-day line up exponentially. See that red dot? See that blue dot? See the green line? They're lined up numerically, 5, 10, 20. So the moment they do that back here sets the tone for what's about to happen, meaning price is going to start to move up into what we call a stage 2, right here. Now, how far is it going to go? I don't know. I have no idea. But one thing that I can do is I can study, right? I can go try to figure out how much is this stock worth? What's the value of the company? And you may say, well, I don't know how to do that. Good. There's services you can pay for. You don't need to know. You don't need to know how to value a car to buy a car or how to value real estate. You don't know shit about real estate and you buy houses. People don't know the value of a house. The only way they know the value of the house is they look at the houses around them. I mean, do you know how much 2x4s were in there? Do you know how much plumbing, right? Do you really? You know how many nails they used? Like, you don't know how much it cost to build that home. Now, you could get down in the weeds and you could see the building supplies. If you were building a brand new home, you might could do that. But most people looking at houses, they don't know that stuff. They don't know the type of electrical wire that was in. My point being is you do a lot of things in life without knowing all of that stuff, right? You don't know how much the wiring in your car cost. What kind of rubber versus the plastic in it. You don't know that, but you can very quickly figure out the value of a car. You get on Kelley Blue Book, you whatever, and you're like, okay, cool, it's worth about $4,000. Well, you can do the same with stocks, and there's people that'll value them, and so you can go and value a stock and see, okay, cool, if this stock is worth more, and it just sold off, and now it's going sideways, that's an opportunity, right? But if I go look and the stock is run up and it's now true value and we're hitting a stage 3, that could give you some insight too, right? And so if you're trying to allocate your money to the best way and you're trying to play this chess game by having these different trades going, you're going to want to be taken from this one, right? and roll into another one. And that's where the money flow can get, that's where the part that takes time, trimming this, right? So if you look at this is 1 day, 2 day, 3 day, 4 day, 5 day. That's a week. 1 day, 2 day, 3 day, 4 day, 5 day. That's 2 weeks. 1 day, 2 day, 3 day, 4 day, 5 day. 3 weeks. So if you look, this has been 3 weeks with price basically at the same price. Look, 3 weeks. 3 weeks. 3. So what does that tell you? Well, if you look over here, that's pretty common, right? Look over here. Is that common for it to spin weeks at a stage? Super common, man. So it was up here, up here, up here, and then what? And then it rolled over. How do we know it rolled over? Price went, what? Below the 20. And what happened? The 5 day, 10 day, 20 day, everything started pointing down, right? And where it happened then? Then price began to move down. And as long as those moving averages, which is just a numerical calculation of the average of price, as long as they're on this side and they're numerically aligned 5 day, there's your 5 day, there's your 10 day, and there's your 20. If they're numerically aligned this way, then price is going down. And it's going to keep going down until it stops. And when it stops, it's then going to what? Start to go sideways. So rather than me trying to worry about the exact bottom, what I'm trying to find is the price going sideways. Now, what I just gave you is the key to the money flow. I don't, up, down, whatever. Stocks go up and down. A lot of you people get wigged out about prices going up and down. Let me let you in on something. They were playing this game before you got in. I don't know if you know this, but before you ever owned stocks went up and down. Before you ever got in the stock market, it went up and down. Prices run up, it pull back, it run up and pull back. And then sometimes we get in and we think the fucking game is supposed to change and just go up for us. Just up, 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 up. That's not how it works, man. So a guy will get in a stock and he's come down and it's like, well, pull up the chart. Has it ever done that before? Oh, yeah. Okay. So you thought it would never do it again? That's how price moves. So would it shock you to see Gush come back and sell off and come down here? No. Take this chart back. It's been doing it over and over and over and over. Technology sells off. Let me let you in on something. Apple will sell off. They all sell off, man. And that sell-off is how you can get rich. So all you guys that are like, oh, I don't want the market to crash. That's because you're stupid. Of course you want it to crash. Of course you want stocks to come down. You want great companies to come down. It's the only way to multiply your money, man. All the money made in Bitcoin wasn't because it went up. It's because you bought it when it went down. This is a lost concept on people. The problem is when you bought it, it affects what you're seeing on the thing. This is a common problem with traders. Setting or having unrealistic expectations causes you to define or interpret and therefore perceive market information as threatening. So let me give you an example. Let's say for some reason you don't know the money flow and you bought over here. Now I would tell you don't do that. Why? Well, the RSI went extreme and price was going sideways. So I know that's a stage 3. Now we'll get into talking about how do you know, because a 3 can become a 1, but let's keep it simple for now. Now, so what I fully anticipate was price went sideways, price ran up, price went sideways. Now I fully expect it to come down. Now where's it going to come down to? Well, look on our pattern. When price comes down, it stops where it stopped before, completing the pattern. See, this is a numerical pattern. It's a fractal pattern. The money flow trading system is fractal. A fractal is a never-ending pattern. Fractals are infinitely complex patterns that are self-similar across different scales. They are created by repeating a simple process over and over and over in an ongoing feedback loop. Driven by recursion, fractals are images of dynamic systems, the pictures of chaos. Geometrically, they exist between our familiar dimensions. Fractals are patterns that are extremely familiar. Nature is full of them. Right? All hurricanes set up the same. Tornadoes set up the same. Okay? So these fractal pattern, this is a fractal pattern. And it also is fractal in the sense that you could buy 1 share, 5 shares, 10 shares, or 100 shares. Now, sometimes, well, we won't get into that. So as you own a good company, listen to what I'm saying. This is super important. As you own a good company over your lifetime, Coca-Cola will go stage 1, stage 2, stage 3, stage 4, stage 1, stage 2, stage 3, stage 4. So if these stage 4s mess you up, you will always suck at trading and you will always be terrible at the stock market because you're denying reality. And reality is things go into stage 4s. You need them to go into stage 4s so that you can compound your money at a lower price. Only in the stock market do people worry about sell-offs. Everybody bitches every day, oh, I can't buy real estate because the prices are too high. But then when you get cheap prices, they're all freaked out. That's usually how it goes. So this pattern, you can see it. See, the difference is in the stock market, it gives you a chance to buy these things fast and quickly. In the real estate, it takes forever, man. Yeah, man, I'm looking at the 20-day. Just watch, man. Fucking, like, it ain't that damn complicated. What you're looking at is the 4 stages of price movement. So you don't even need the 20-day, man. You don't even need it. The 20's there just to help you put a scope on it. All right, here's a good question. My man says, if you plan to hold a stock for 20 years, does it really matter what stage you buy at? Because I'm really fucking lazy and don't want to put any effort into maximizing. No, it doesn't matter, bro. But let's just do a simple little test. Let's say that the way you're doing it, you're like, well, I'm too lazy to buy them. I just want to hold my stocks forever. Okay, bro. So you buy some stock here, and then I wait, and we both buy some stock here. So let's buy some stock here, okay? And then I'm smart, and I watch the money flow, and every time it comes down and does a box, I buy a little bit. You don't. So now when we come back to break even, right, you're still holding your stock and you're back to even, and now I'm ahead of you. Uh-oh, now I'm ahead of you. And that was just a simple 3-month window. What if I take this knowledge and I do it over the next, I don't know, 10, 15, 20 years? Look at this guy. We'll just remove this guy. You get what I'm saying? You get what I'm saying? So he says, well, let's just do that. So let's take this concept of Bitcoin. So when would you have bought, sir? Based on that strategy. And yes, just holding it over time works. I say that in the beginning. Stocks 71% of the time move up. So if you just buy a stock and sit on it, yeah, it's going to go up. No shit. You can do that with real estate too. You can just buy a house and sit on it, right? And that works. Over time, the house will go up, right? It's going to go up. But would there be an advantage if you watched your neighborhood and when something went on foreclosure, you went in and snapped it up and got it below value and put in some work? Like, this is what this is, man. This is the ability to snap up a foreclosure. So you could own Exxon, right? You own Exxon stock. And you just hold it for the rest of your life and you compound dividends, and that works. But what if you hold Exxon and you're watching it from a bigger perspective, and every time it goes below true value, and we can estimate what true value is pretty easy, right? And every time it goes below it, we wait for the stage 1s and then we start accumulating shares versus the guy that's just holding it. So if the guy's just holding it, and it goes up and then it comes down, then it goes up. Yeah, over time. Look, over time, from left to right, at one point it was over here, and then now it's up here. And so he's made money, right? All right. But as a trader, one, we could have moved in and out. We could have took down some Exxon, right? Because it's run up too high. And as it comes down, we start looking to put some more back on. But that's going to require work. And so, yeah, that takes what we call in America skills. And so if you don't have an interest in doing that, then you just buy it and hold it. And that works. And that works. All right. Let me turn it. I have to turn the comments off because it's too fucking stupid to continue to talk. It really is too stupid. Well, that's in the past, but how do you determine it in the future? All right, wise guy. Apparently you just showed up to class. fucking come in church, mess it all up. Right here. When price goes sideways and breaks above the 20-day moving average, it tends to run up. And it goes up until it puts in a stage 3, which where price stops going up and then starts to go sideways. Okay? Now, these things aren't 100% certain, right? But if we were to look, let's back it up and let's just go to Bitcoin, man. Right? If we go to Bitcoin, let's do it with the moving average. And let's say he says, well, but it doesn't work in the future. Okay, guys. I don't know how then I'm able to do this all the time. But when it sells off, starts to put in a box, right? Starts to move forward and then breaks above this, what does that tell me? It tells me we're moving higher. So as a trader, I want to get long. Well, how far is it going to go? I don't have any idea. So what I'm looking for is this RSI to go extreme. When that goes extreme, it tells me price is probably going to stop going up and start to go sideways. So I draw my little pivot points every day. I'm looking for the high. Are we building a box? No, we went a little higher. So now, look, we have 2 pivots, right? We got this one, and now we got this one. Is price going sideways, or is it going up, or is it going down? Well, it's inside the pivots. So what do we have? There's your pivot. There's a pivot. So we drew our box, right? There's stage 1. There's the stage 2 breakout. Now we're going what? We're going sideways. That's a stage 3. So if you're looking at this pattern, what do you see? Stage 1, stage 2, stage 3. Distribution means for every seller, there's a buyer. And price stops dropping. Seller, buyer, seller, buyer, seller, buyer, seller, buyer. And it doesn't go. There's no overwhelming force of buyers or overwhelming source of sellers. The moment there's an overwhelming force of sellers, you're going to see pressure to the downside. Prices are going to start to push down. And where are they going to stop? Almost always, what the money flow believes, is that they stop where they stopped before. And that's how you get things like support and resistance. If you get down here, and that's a whole nother video. Each one of these are a fucking hour-long video. The numerical alignment of moving averages, price in relation to the simple 20. Where's the RSI, right? Where's support and resistance? Where's the MACD? Now, on the MACD, and this is just fast and dirty, I don't really care about the crossovers on the MACD. That's not my concern. When price crosses the 0 line, they call that a crossover. And you'll see that tends to happen when it's breaking out. That's not what I'm looking for on the MACD. I don't need to see that. I can see it in price. What this is telling me is momentum. Once this stops going up, the histogram right there, if you notice what happened, it started ticking this way. What is that telling you? It means the momentum to the upside has stopped. And now it's starting to come down. If you plot this, if we were to draw this straight up, what you're going to see is a lot of times it's going to correspond with the RSI going extreme. Now in crypto, this extreme zone can go much further than in stocks. So if we were to look at Tesla right now, which is a complete fucking runaway, but what's a better one to look at? Let's see. Where's a good one? Let's look at X. Now, I want you to see something. You're saying, well, how could this work in the future? All right, I want you to see something. As you go through and pay attention to these charts, you're going to see this pattern of price movement. Now look. See how it moves? Where did this stop? Right where it stopped before. Had it ever stopped here before? So had it stopping. Had it ever stopped here before? Stopping. It stopped here a bunch of times, right? That's a zone that it stopped. Where else has it ever stopped? Has it ever stopped up here before? If you take it across, right? Look, it stopped here a bunch of times. Stopped here, stopped here, stopped here. Now, so as it runs up, there's your breakout. Price above the green line runs up. Where do I think it's going to stop going? Where it stopped before. So when it breaks down and goes down, where do I think it's going to stop? Where it stopped before. And so as I watch that pattern play out, this is what I'm watching. Now, a lot of times it's not as flat as that, but it can be as flat as that. It's usually at an angle. So this game plays out where it goes sideways, runs up, goes sideways, comes down, goes sideways, runs up, goes sideways, comes down. And so, we don't know how long the stages are, the stage 4 declines or the stage 2 up moves. But if we add in fundamental analysis and we add in research of stocks and find stocks that are undervalued, and then we lay these indicators over it, the 5-day exponential, 10-day exponential, 20-day simple, where are they numerically aligned? Are they aligned 5, 10, 20? Well, that means prices are moving up. Are they aligned 5, 10, 20 to the downside? That means prices are moving down. And as you begin to construct the boxes on the stage 1 and the box on the stage 3, and you look for where is the MACD, where's the RSI, and you bring all this shit together, you'll begin to see price. And even as that, it's not certainty, but it brings order to chaos. It brings order to chaos. Or you could just fucking watch Reddit and chase shit around like an idiot. Yeah, that's another option you could do. Just fucking buy weekly options and fucking just chase money like a lunatic, like a degenerate gambler. That's another option. That's what a lot of people do. No strategy, no discipline, no clue what they're doing, don't understand stocks, just fucking buying, clicking buttons on their phone. Like, that's pretty good. That's something you can tell your kids about and be like, yeah, that's how I got rich, man. I was just pushing buttons on my phone. Yeah, I didn't do any reading. I don't know. I don't understand how to value companies. I just click shit. So, as we sell off, a box starts building. Right? This is one we traded, steel. If you trade with me, what did I say? We're building a box. There goes the stage 4 decline. We get to the previous low. What am I looking for? Is this stock undervalued? Well, we're under the 200. We're starting to go sideways. If you remember, we're getting long. Now price has moved on the other side of this green line. What does that mean? It means it's bullish. It's going to keep going up till what? Till it hits a spot to stop, either previous high or the RSI goes extreme. Once the RSI goes extreme, we start looking for a top. In other words, we start looking for the pattern to end. So it'll go sideways, run up, go sideways, run down. We don't know if it's the end. So what we do is we just systematically put in rules for ourselves. I start to trim, take 10% off, take 10% off, take 10% off. If I'm trading. Now, if you're just doing buy and hold, you don't have to. But let's say you started a new position in a new stock, and one of your stocks becomes overvalued. You could just trim a little, sell 3, 4, 5 shares, and establish that new position that's down here, right? And so as you go through and watch your portfolio, you could allocate money to stuff that makes more sense. Just a little. You don't have to stop or run away. So let's say you're in Tesla right now. If I was in Tesla right now, I'd be trimming some. I'm not in Tesla though. But what would you do? Nothing. Once you trim it, just let it run. There's nothing to do. Look, price, look at it. Look, I mean, it's been this way for a while. 5, 10, 20. There's nothing to do here. You just let it be, man. Just let it go. Let this thing just keep running. Take a little off and then just let it run. Run, 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 run. But it's running out, man. It'll run out of steam eventually. Eventually, it's going to run out of steam. No, my man says, does the real estate market flow like that? No. No, it does not. It flows, but not like this. That's what I'm saying. Nobody knows that, but housing prices are affected by supply prices, right? 2x4s, nails, all that shit adds up to the price of a house, labor, inflation, the ability to get materials. But nobody knows that. You're not sitting around with a calculator seeing the actual true value of a house every day. But stocks, it's given to you every second. The stock market's coming at you much faster, man. So that information, is coming at you. And the other problem with the real estate is it's not national. Real estate is not national. Real estate is it's local. You can have a hot area in one area and have a slowdown in another area, man. And so it's hard to to look at real estate like that. Real estate, you should just be buying all the time if you can afford it. And you get guys, they're going to read. These guys always make me laugh. You're like 32 years old and you read things and you're smart and you go, oh, well, based on my reading, I think this. Except that's not how it fucking works. You can read all that shit you want, all the data you want, follow who the fuck you want. You still don't know what it's going to do. You have no fucking idea. If you knew, then all economists would be rich, and they're not. They're school teachers. Those people know all kinds of shit. People that are economists and people who they got PhDs in economics and looking at fucking curves and charts and data and all this stuff from the Federal Reserve and all that. And they're broke. They don't have any more than you do. So all that data doesn't help with anything, man. You know, it might give you an idea, but here's an idea. Buy shit other people aren't buying. That's a good idea. Buy valuable things that other people don't want, right? So you buy oil when it's cheap, right? You buy Tesla when it's having problems and nobody wants it, right? So you got to do the opposite, man. So when was the best time to buy Zillow? It's breaking out now, right? When was a better time to buy it? Today, or when it was going into a stage 4 decline and stopped? Get what I'm saying? So there's a lot of ways of using the money flow. But, you know, just as a general rule, is it better to buy it here or to buy it here? I mean, that's just common sense, right? So my point to that is, and we didn't know that would be the bottom, right? It tried to break, pull back, tried to break. But you notice it kept holding support. But my point being is a lot of times the best time to buy is when it doesn't look like it's the best time to buy. And then when everybody else is buying, that's usually when you should start to sell it, man. That's usually what that means. Let's see. Yeah, we'll turn off comments again. People are too stupid. So, where's Zillow going to go? Well, it goes where it's gone before. So it broke through that one. Where's the next one? About 110. Then where's the next one? This is how I would plot it out. I have no idea. Now we can go look and we say, okay, true value of the company is $135. So that's good, right? If we were going to flip a house, we need to know what houses go for when they're in great shape. That's the number. What is the house worth if I fixed it perfect? What could I get for it? Well, in a perfect world, they're going to say it's worth about 135. And I'm just guessing, but let me pull up tip ranks because I bet that's pretty close. Let's pull this up. Pull up Zillow. So any stock I'm doing this, oh man, look at that. That's pretty close. 144 is what they got on there. So we could come over here and we see these analysts. Now, these guys don't know either. You need to understand that. They're looking at the book value in a perfect world. If everything goes great and the market's doing what it's supposed to do, this is the value of this stock. It's worth about 145. Well, the money flow is saying it's going to 210 and then 110, 119. And then, yeah, where's it at? I need to take the chart back, but it's about right here at 140. So in order for it to get from here to here, you might go through a whole bunch of stage 1, 2, 3s, and 4s. Meaning it's not going from here straight to 140. Rarely. I mean, it can. You can get runaways, but those are pretty rare. You know, Tesla is doing it right now. But it's probably going to run up. It's going to run up to like 110 right in here we talked about. And then it's probably start to go sideways and then might start to pull back. And maybe it's not a full-blown pullback where it comes back to the beginning. Maybe it just pulls back a little and then starts to go sideways. A lot of times that's what happens. You know, it's working off this RSI. You know, once that RSI pegs the extreme, it's really, really, really difficult for stocks to keep going higher unless they become a runaway. I have a chapter on that in the course. How to identify it. Tesla's a runaway right now. You know, and when you catch one, that's beautiful. Don't mess it up. Just let it be. Sometimes I get people when there's a runaway, all they can think about is selling it. And they're like, oh, well, I only got 3 shares. What does that have to do with anything? Just let it run. Like, leave it be. Because you may stop the run and buy something that ain't going up, man. So sometimes we're our own biggest enemies. So in order to get to 140, you may go sideways, up, go sideways, come down a little, go sideways, go up, come sideways, go down a little. So in other words, all of these stage 4s become your friend to help you if you're trying to build that position. Let me show you one here. Let me give you something to think about. This is McDonald's. It's trading at $245. Let's back it up. In the year 2012 or 13, it was trading at $70. So, and it does 70 for a bunch of months, right? And then it breaks out and runs and pulls back. Well, let's say you bought some at 70. And now the pullback pulls back, the sell-off, it pulls back to 100, which is still more than you bought it for. You might say, well, I can't pay 100. I bought it for 70 last time. Okay, well, don't buy it then. And then look. Price, what you paid for it will mess with people. But the stock market doesn't care what you paid for it or when you got in. Like right now, someone will be like, whoa, Tesla's really expensive. Maybe. Maybe not. Like, I don't know. Nobody knows, man. So that little pullback. Now, here's the funny part. I want you to think about this. Think this through, man, as you're sitting about today. Well, let's say a guy bought it here at 110. This is a weekly chart, right? Oh, these are monthly. So think about this for a second. This is a monthly. That means 1, 2, 3, 4, 5, 6. 6 months straight down. This is where I literally have people quitting the money flow. Oh, this guy, like they're all fucking butthurt. They don't understand. What's going on with my stocks? Right? Look, this 6 months of it going down. Down, 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 down. And that was in the year, what? 2016, toward the end of the year. And then it stopped. So you had sideways, up, sideways, down, and then what? Stopped. So for the guy who bought it up here, this 6 months was terrible. It's just brutal. It's going down for 6 months. But if the guy bought it over here, it really ain't that big a deal. Right? Is it that big a deal? No. So if this is when you got started in the market, this is awful. It's brutal. But then look, it runs up. It runs up. Huge. It goes from 100 to 160. 60% return. So you tell me, the guy that bought it here who was dying for 6 months, how's he feeling now? Feeling great. So what if the guy just bought here? Now it pulls back. He's not feeling so good. Do you see how all of this is personal? This has nothing to do with the market. I mean, the market doesn't give a shit when you bought it, when you got in. It has nothing to do with that. But yet we will interpret what's happening based on when we purchased it or what we were, you get what I'm saying? And so one man foreclosure becomes another man's opportunity. So when you bought a stock here and then it pulls back and comes down here and you're like, hey, gee, should I get out? Another guy's like, hey, gee, you think I should start buying? And we're both talking about the same stock. I can have two members of our group. One was in this trade. One was not in the trade. The one who was in the trade is like, dude, man, we need to fucking dump this thing. The guy that wasn't in the trade is like, you're telling me PayPal is this cheap? I'm buying some. Both in the same trading group. But the difference is the price he paid affects his opinion of the stock. Think on that for a minute, man. It'll blow your mind. So if you're the kind of guy, well, I can't pay more than I paid. All right, well, then you watch McDonald's go from 70 to 245 and you couldn't buy any because it was too high. Oh, man. I want you to think on that for a minute. Look at Facebook. Now, here's the thing. Look at Facebook setting up new stage one, very bullish. So we had a breakout, right? There's your stage 4 decline. Price is going down. Where do we expect it to stop? Where it stopped before. It stopped here. We could run it across. There's your stage 1 breakout. It's not a breakout, but it's price is above the 5-day moving average. We got a box, and there's a breakout. Where's our target on the breakout? Right here. What happened? It broke back down. Matter of fact, it broke support. The fact that it came back up into the box, super bullish. So if you're really tight trading, you might have got stopped out there. See what I'm saying? Because it broke support and all that, broke the box. You want to get right back in. I can't tell you when I was tight trading. I don't trade that tight anymore because I really don't. I've just grown to such a maturity level and understanding of how the market works that it don't even faze me, man. This shit's going higher. I have no doubt. I mean, do you need, here, let's do a history lesson. So go to the weekly. Look. All right, where was it? It was down here, and then it went up here, okay? And every once in a while, it sells off. So there was a guy, remember, think about this. There was a guy or a gal who bought Facebook here, and then it ran up, and then it totally collapsed on him. And it went from 222 all the way to 140. It lost $100. Now, you think that affects them? But if we look at it today, when was the best time to buy it? When that guy was freaking out. So this guy's opportunity is this guy's misfortune, right? Or so it's perceived. It's all perception, man. Stocks go up. They go up. Every once in a while they sell off. Right now Facebook is selling off, and then it'll go up. That's what they do. That's what they do. That's a weekly, though. And you say, well, maybe not. Well, let's back it up to a monthly. Now, in this game of always going up are new companies. New companies play this game, right? Dash is a new company. How old is Dash? It's not that old, right? So if we back up Dash, as these companies come online, that's why I try to tell people, don't buy IPOs, man. I know you can't help it. Most people are degenerate. Most people are not traders or investors. They're just gamblers. And there's nothing wrong with that, but that's not the skill and the art of trading. There's no skill in playing roulette, right? Now, the more games of chance we get, there's skill. And I'm not against gambling. Let's call it what it is. Here's the IPO. It runs up. What I tell people, always wait. Never buy IPOs. Never. You will always get a better price. You could have bought Dash down here, right? Down in the one, and now where is it? It's up in the 200s. You can go look at Snapchat, Facebook, Instagram, all of them. They IPO, they rocket up, they come back down. And then if you wait, you can pick them up. Airbnb. So these are new companies. This will go through stage 1, 2, 3s, and 4s for the rest of your life. Dash is not going anywhere. Uber is a new company, not going anywhere. What else is a new one? We can just go down the list. And they're going to play this game like McDonald's did. Uber's not going to stay $40, guys. You're going to be looking at DraftKings not going to stay $35, $40. Just like Facebook IPO'd, ran up, came down. Like that. These are new players to the game, and they're going to start doing that thing. Chipotle's didn't start out at $1,300. It IPO'd at like $50, $60, ran up, crashed. Like, go back and look. And then now 15, 20 years later, that game's being played out, man. So if you look at, so these are the new Facebooks. These are the new, these companies like Uber and Lyft. That's why I'm trading around them, because one day they're going to be $300 stocks, man. So go back and look. Look at Facebook. It's $25 back here. Where's it at today? Look, man, it's crazy, right? Same thing, man. And then you're going to have a correction, and maybe it falls 50, 60, $70. And this game plays out, man. And so if a guy says, well, wouldn't buy and hold and work just as well? Yeah, I mean, if the goal's not to get richer. If your goal's to get richer, why wouldn't you take advantage of discounts? So when someone says that to me, well, just buy and hold, I can't comprehend that because I'm trying to get richer. So in order to get richer, I need to buy cheaper. So you're telling me there's not an advantage if I can look at these patterns and just as a general rule say, okay, that was a run up. There's a state, right? And now we had a big run down. And if I can go see, what do they think Facebook is worth? Let's go see. Now, this is just quick and dirty. So they say 405. Could you pay 405 and over time be good? Yeah, you could. Because it'd probably go to 550 over time. But wouldn't it be better to wait till it sells off and watch it go down and then I start accumulating? And let's say I don't even get the very bottom. Well, I didn't buy up here. And then once this started breaking, I wasn't buying. And I let it come down and down and down and down. And what am I looking for? I'm looking for bottoms to set up. And even if it's not the bottom, let's say it does it again, good. I still didn't buy up here like a dummy, right? And so over time, if I'm targeting what appears to be bottoms, and I do it over and over and over and over and over, then guess what happens? I'm buying the bottom all the time. I may buy all the bottoms. I have friends that they are not in the stocks and they will always say it's overpriced. Yep, that's true. They always say it's overpriced. I've been hearing that shit my whole life. Oh, market's overpriced. Okay, well, I guess what? In 10 years, it'll be fucking higher. Well, it seems expensive. Okay, well, in 10 years, it'll be even higher. Let's see. We got 68 likes and 252 lazy people on the thing. So I guess their fingers don't work. They can't hit a button. I gotta talk to them like a fucking douchey YouTuber. Come on, guys, subscribe. Make sure to subscribe to the channel and click the like button. I guess I gotta beg them. Maybe if I just came to your guys' house, rubbed your shoulders, and fucking clicked the button for you, then you could click it. Maybe I gotta come to your house and click it for you. Let's see. Where are we at, man? What brokerage would you suggest? I don't know, man. E-Trade is what I use. All of them are fine. Whichever one you'll open and execute your trades on. Problem with Robinhood is they're going to get you on margin. I would not trade on margin right now. Man asked about race and earnings. I don't really take into account earnings. I'm not day trading. You got to get real clear about what you're doing. I don't day trade, so I really don't care about earnings. It's not that I don't care about their earnings. I don't know what earnings are going to do. All right, bro. I'm about to kick your ass off this live. Did you just ask me, is race in a buy zone? I'm guessing you just got here, man. Is race in a buy zone? No, it's in a sell zone. Now, go buy the book, man. I just saved you some money. Whenever the RSI goes over 70, that is the time that you start selling because it's the top. All right, I'm writing your name down. If you don't buy my book, don't ever come back on here. Look. See the top, homie? When that went extreme, what happened? The price turned down. What do you think's about to happen? Price is going to go down. What do you think happens when it's on the low? It puts in a bottom. So once we have an extreme low RSI, I'm looking for a bottom. So remember I talked about I start drawing my pivots every day, right? And then the moment price breaks above the 5, if I think this is the low, and that's the pattern we're playing, right? Right, stage 4 decline. Has it ever stopped here before? Yeah, it stopped here before. So there's your first buy. There's your stage 2 breakout, right? Now this is too close for a target. So we would go to the next one. I would trim some right there, and look where it stopped. It put a box, right? See the box it built right where it was before. And you'll see that inside of the pattern. So as price moves up, you're going to see, you're going to have a little box, moves higher, a little box, moves higher, a little box, moves higher. What we're looking for is trying to determine the stage 3. What's going to happen? We're going to go down our list. Where's RSI? Where's the MACD? So if we come over here, it's hitting an extreme RSI. Where's the MACD? It hasn't started to tick down yet, if you notice. Look, it's still going strong. What does that mean? It means the momentum is still to the upside. Well, I want to sell into strength. I want to buy weakness and sell strength. I think the game is to buy low and sell high, if I'm not mistaken. If that's the process. But we don't know the very low and we don't know the very high. You know, and the guy says, well, that works in the past. Well, I'm going to let you in on something. It works in the future too, bro. Because what I'm saying here is exactly what I would do here. And over here, and over here. So, no, this is not a buy, man. What is wrong with you? He says it tanked after hour. No shit, it tanked. It's supposed to. It's already gone extreme. Are you a fan of dollar cost averaging, or do you only accumulate when stocks are low? Is race in a bottom? All right, sir. You're on the wrong channel for that question. Yeah, we're going to dollar cost average, but we're going to use our brain as to when we do it. Buying on stage ones is dollar cost averaging. If you buy lows and you do it consistently, you're dollar cost averaging. You're buying lows. Okay? I don't know why people think the best way to dollar cost average is just to blindly buy regardless of what price is doing. It's so fucking stupid, I can't comprehend. Now, will that work over time? Yes. That works over time because stocks move up over time. And so it works. So now what if we combine the idea that stocks go up over time with better timing of those stocks? That makes sense? But yes, you can do the dollar cost average. If you don't want to learn trading skills, that is the only other option you have. Okay? So as we begin to watch, let's put race on here, man. All right, let's look at a couple things we had going on in crypto, man. Crypto craziness this weekend, man. Mana, look at this. Wait, let's put it on this one, sorry. Let's put it on with the indicators. Look at Mana. So we trimmed a bunch of cryptos this weekend. Mana shot up, exploded. When you see this green, you know what that's telling you? It's time to take profits. So we trimmed some. That's an explosion. That's a completed swing trade. Doesn't mean it's done going up, but it's gone from one extreme low to the next. So where was the low? Right in there. Do you want to buy with the RSI up here, or do you want to buy with the RSI down here? So the best time to have bought would have been what? Somewhere down in here. Actually, it was right there. There's your breakout, right? And now we've just been cripping sideways. So, and then it exploded. So we trimmed some. Not all of it, but I trimmed some. Now we're down 23%. We should be down 23%. It went up massive, right? Could keep going. But see how that's a systematic way of taking money off the table. What's another one we had go crazy? Now, Engine I profiled on my podcast. I was begging people to buy this one. Why? This is the money flow, man. Like, this is such a simple money flow pattern that I did a podcast on it. I basically did everything but come to your house and beg you to buy it. Stage 2 breakout, extreme RSI, that ends up being the top. Remember, it doesn't happen immediately. It can take a little time to build out. There's your stage 3. We went into a stage 4 decline. Go back and look at my podcast. This is where I was begging people to buy it. Pulls back, stops, and there's your breakout, right? There we go. Now we got to get in it. Where's our first target? Previous high, right? Where's our next target? RSI extreme. So now we start downsizing this trade. It's a completed swing trade. They don't go straight up, man. So look, sold off, went up, sold off, went up. Now what? Now what? What do you think's logically going to happen? Sells off. And does that mean it's done? No, and then it can still go up, man. That's the money flow pattern, man. I had a guy leave my group. He told me it doesn't work on crypto. Okay, dummy. Yes, it does. What are you talking about? Anything that moves, any price that moves, it works. Let's see. There you go. So you start trimming it. Now what? You hold some. Where's it stopping? See, it's stopping where it stopped before. If you look at it, we'll see if that level holds. That level holds, probably builds out, and then it runs up again. That's what we're hoping. That's the best case scenario, man. Let's see. What else did we have? We had Engine, sold some. We had Mana. What else did we have? Oh, this morning I woke up and sold some STORJ, USD. All the coins I own, if you go look in my newsletter, they're all there. Why am I selling it? RSI just pegged 81. Do I sell the whole thing? No. I'm just selling some. What happened over here when RSI hit extreme? That was the top. And price went down. And what did it do? It stopped dropping and went sideways. Built a box. Then it broke out. And then what? We want to be a buyer. Now I want to be a seller. Right? Isn't that how you want to do it? You want to be a buyer, right? You want to be a seller. You want to be a buyer. You want to be a seller. So over here, would I want to be a buyer? No. Now, if you're chasing shit, if you don't know what you're doing, if you don't have any skills, maybe, oh, it's up big, I need to buy that. No, don't do that, man. That's dumb. Don't do that. You want it to be the buyer back here. So let that go. You're not in it, let it go. I mean, if or if you do buy some, don't buy that much, man. What else did we have breaking out? So crypto's been killing it, man. 1 inch. Look what happened. RSI went extreme, ran up, and what happened? Price comes back. We expect it to come back. Pretty cool, right? So when you see this going extreme, do you buy it? No. A lot of people do. Now some of them are day traders and they're playing. So the money flows fractal. So let's drop it down to a 1 hour chart. Look what we saw in the 1 hour. Big ass explosion. There's your sell signal, right? Right there. Stage 4 decline, right? A lot of these cryptos don't have enough volume, honestly, to be trading that low. But you can do Bitcoin like that. You could do Bitcoin in the 1 hour range. If you just wanted to. If you just want to sit in your computer and trade like that. You could do Bitcoin like that. Look. Big stage 4 decline, right? There's your stage 1. There's your setup. There's your breakout. Runs up. So watch. It runs up. Stage 1, right? RSI goes extreme. What do you have? You have it building out, right? That's a completed swing trade. Oh, hold on. I'm getting fucking crazy here. Come on. Extreme low to extreme high, man. Let's turn on commenting. Yep, X. We saw a big breakout in X. What else we got, man? Big breakout in X. That was kind of nice. So that's the basics on the money flow, man. But inside of all of that, man, this will take you time. The biggest problem you're going to have in this is you're not going to stick to it. That's the biggest problem, man. You know how to get muscles. Take your ass to the gym. Work out. Stay on it. Don't quit. And guess what? You get in shape. It ain't complicated. The hardest part you're going to have with the money flow is 2 or 3 months where it's not. Remember I showed you that thing where McDonald's went down for 6 months? People get messed up during that time, man. And they start style drifting. All of a sudden you start doing shit that's not your style. You start getting all messed up. And then what happens is you never master anything. You don't master it. I mean, you could read for fucking days on portfolio management, position sizing, understanding sectors, the size of your trades, right? How much to take on and off when you execute. There's so much going on in here. And what people tend to spend most of their time on is when to buy. And that's not it. It's what to manage and how to manage and getting ahead of these sector rotations. So if you remember, I was talking about time for steel stocks, man. That's semiconductor. So this is one we're in, right? Why? Semiconductors sell off. Had they ever stopped here before? So this is what I'm watching. They ever stopped here before? Of course they have. Doesn't that look like the money flow? Right? It starts to go sideways, so I'm watching it. Price breaks out above. There's our buy signal. Right? So if we're watching the money flow, price went sideways up, sideways down. Now it's going sideways. So what does that mean? There's my buy signal, right? So I want to, as a swing trade, this is a triple leverage. So I can't, this is not a position trade. This is a buy and hold. Now again, I'm not talking day trading. So if you're a day trader, a lot of the stuff that I'm talking about may not apply to you. I'm talking to people swing trading and position trading around the money flow, okay? And where's my target? Well, where it's been before. Take it down a little bit. But we're not doing this. This is the SMH. We're doing the triple leverage, so you don't need as much money. So, what is the SOXL? Sorry. So our target's 48. It's probably going to hit it at the open on Monday. So what am I doing? Well, I'm going to sell some. Probably about 20%. And there's the money flow. There's your break. It's going to hit. And then I'm going to let it run. When the RSI pegs extreme, I'm going to sell some more. And guess what? I fully anticipate it's going to sell off at some point. It'll go sideways, run up, go sideways, and come down. And so we want to buy, when we think it's a stage 1, we want to buy the breakout. We want to take it down into the stage 3s and be out on the stage 4. In a perfect world, man. Dude makes more trading share than people other post to their college job. Let's see. Appreciate you, bro. What's up, Manny? What do I think of Chinese stocks? I don't really care about regulations. If everyone else doesn't like it, I like it. So if everyone's against Chinese stocks, that looks like a pretty good trade to me, because everyone is stupid, even hedge fund managers. Don't forget that. Just because they are on TV don't mean they're smart. Don't listen to all the news, man. The news will have you doing the opposite. So when everybody doesn't want something, you should be thinking about doing it. So we're seeing the little money flows play out here. I'm long Chinese, but for me, this is a position trade, okay? Meaning when these stage 4s happen, I'm not doing anything. I'm just buying on the stage 1s. Right? It's all. I'm nibbling because I plan to sell it way up here. That's a little bit different way of trading, though. That's called position trading. These guys on TV don't know shit. Now you need to listen. You want to hear what they're saying. Sometimes say, well, if you say news doesn't matter, why do you watch it? Because I need to know trade ideas. I need to know what other people are thinking. If everyone hates something, then I probably should be looking at it. Everyone's usually not right. You remember when everyone hated Bitcoin at 29,000? Oh, it's used by criminals. We all hate it. Now it's 60-something. They all love it. They're opposite, man. These guys will all hate this shit when you, like, look at Hasbro. So we started doing our Christmas trade. Well, Christmas is coming up, man. So Christmas is coming up, right? Christmas is coming up. This big-ass stage here. Price came down. Price went extreme, right? Now, I know Christmas is coming. Well, why is this happening? Supply chain, blah, 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 blah. Christmas is going to be awful. We're all going to die of COVID, right? So if we come over here and we put in Hasbro, what's the company worth? And it's worth about 117. So we got some upside, right? I like it to be more like 30%, but this is a big blue chip company. Well, all I need on a swing trade is what, 98, 99? And price had fallen all the way to 86, man, and stopped. So it's doing the money flow. So as I'm watching the pattern, sells off, starts to go sideways. I know it's worth way more up here. Shit, I'm going to start nibbling. And then on the breakout, I'm going to do some more nibbling. And then, so here's where I'll start downsizing it. In a perfect world. Sharp, is it a buy or wait for a stronger buy? Oh, Snap. Let's see Snap. Now, I like these social plays. If you're not in Snap, Facebook, Pinterest, there's a whole list of them, right? Twitter. They're all under pressure right now. Yeah, it's too soon, man. I mean, you could. It's a little too soon for me. Here's why. Look. This is a whole nother video. If you have my course or my boot camp, I talk about this. Call this a broken family. Look how far apart these moving averages are, man. Yeah, my man caught it quick. Broken family. I don't know. Other people. This is damage. This is chart damage. And it takes time. This is not going anywhere until this shit comes together. And if you go back and look, see how even before that move, look, it came together. And if you go back and look, it came together. We need to see some coming togetherness. Get it? And that's starting, but it ain't quite there yet. I'd give this a minute, bro. Or if you do buy nibble, like 1 share, 2 share, like that, nibble, because it still could go lower. It probably won't. It stopped here before. You're on the extreme RSI. You got the stage 4 decline. I like the setup. And so if we go in here and we say, okay, what's Snap worth? We always want to make sure that we're not buying some shit that's actually fundamentally jacked up. I mean, we don't want to do it blindly. They got a 76 target, man. Now, they'll probably bring that down, but it's still much higher, right? So what else we got? Facebook. We got Twitter. Unfortunately, I'm in all these. Let's see. Twitter. Now, I didn't sell any on this. I don't use hard stops. This broke on me pretty fast. It's Twitter. I feel pretty confident it's coming back, so I'm holding it. I'm not buying, though. Why? It's not set up yet, man. I'm not buying it. I need it to come together. Look, on the last big move, that little sell-off don't mean shit. It moved, and then it stopped, and you can see where was the best time to buy. If you waited for that box to patiently build, man, right there was your best day. You had the price come down. You had 1 day, 2 day, 3 day, 4 day. You got a box. You got price coming back above the 5. There's your breakout. And where's your target? Previous high, right? Bam. And then what? Shortly thereafter, you get the stage 3. So do this on your charts. Just back them up. Now, this area here, confuses people. The quicker you can see this shit happening, look, you see what's happening? It's really not doing anything. It's caught. It's caught. Now, these are tiny money flows, but it's caught. You notice the 20 is almost going sideways there. The quicker you can see that and catch on to that, you won't get yourself jacked up in these. And then it broke, man, but damn. Yeah, just giant consolidation. And that can be tricky because it is breaking out above the 20, but it's not going anywhere, you know. These are actually very difficult. I call these in the course gray areas, and these can be very, very tricky, man. If you're position trading, it's a lot easier because you're not going to do much anyway. Pretty interesting, huh? Yeah, nice pop out of Bud. I don't know. I'm not getting too excited yet on Bud. But yes, nice pop. Look where it stopped, right where it stopped before. Crazy, huh? RSI's got to come down. We'll see what Bud does, but yeah. Yep. The whipsaws are a bitch. That's why you got to know support and resistance, man. All you guys running tight stops. Another option to tight stops is running a half stop. Yeah, I like this pattern on. It's kind of broke the pattern a little, but came back up. Now it's come down. Let's give DraftKings a minute here. I wouldn't be buying it here. I was buying in here, but now I'm just kind of waiting, man. I'm just kind of waiting. No, you're too late on Z. Z's already on the move. Let's look at Roku. Roku's breaking down. I mean, technically, stage 4 decline. We're right in support. Yeah, we just got to wait and see. You know, does it hold it? Fuck, I don't know. Let's see. Take these down. Stocks will crash. I don't even know what that means, bro. Let's see. All right, let me kick this guy out. I don't know, man. Sometimes I think I come across and it's like 14-year-old kids trading or something. Yeah, the YouTube channel, just go to my bio link. You can get to my YouTube, man. How do you decide what time period your charts, like day, hour? No, I use daily charts, bro. I use daily charts. Unless you just have all kinds of time. I mean, if you're just insistent on being I'm not a day trader. There's a lot of good dudes that teach you day trading. My friend, day trade professor, teaches it. Pretty sure Manny teaches. There's a lot of guys teaching day trading. That's not what I do. And I help you to get clarity of what you're doing. Figure out what you're doing and stick to it, man. Whatever it is you're trying to do. So for me, everything happens on a daily chart because that's what I'm tracking is this. But even if you're day trading, you know, the money flows fractal. So you can run it on a 1 hour. I mean, you could take it down to a 1 hour chart and the pattern are the same. You know, you're still looking for the same thing. That's a stage 4 decline on there, right? And there's your breakout. There was a breakout. It ran up. RSI went extreme. But the smaller your time frame, remember, you got to get in and out. So when you buy a breakout and it runs up and hits that extreme, you got to take the trade down, man. So, you know, get real clear on your timing. And if you're new, man, I would really back up to a daily chart and just be patient. and be patient. It'll be recorded on YouTube, man. Let's see. Yeah, I'm still adding to PaySave. That's a good thought process. We entertain angels underwear. That's for sure, bro. You don't have to add to a stock, man. Let's say you got some shit that's like Wish. Wish is one that I got caught in, and a few of my friends got caught in. It ain't going away, guys. I'm in no hurry. Sometimes people think because you're underwater and something, it's like you're forced to do something. I'm not I don't have to do shit. I can just sit on that stock and just wait for better setups. Everything is still kind of to the downside. I can wait till this thing starts to turn around a little bit and I can trade it. There's no time limit on these things, man. So as you learn to trade, you can trade. What do you want to talk about, Shiba, bro? It's going up. It's going up, man. What do you guys want to talk about? You should have already owned it. And if you own it, just hold it. Those are options coins, man. Those aren't normal trading things. So, this usually chart and shits aren't going to help you, man. You just, it's just meme trading, man. Nothing wrong with that, but charts aren't going to really help you on that. I would hold up on space. What you're waiting for on space, you want to see it get back in this box right here. You need price to go back up into this box right here. Yeah, I mean, what are you going to do with Shiba, man? Like, it's off the fucking charts. I own a little Shiba. $200 turned into like $1,000, just like that. But you can't use charts for it. It's not even moving like that. You want to see space get back up into here. If it gets back up into here, I'd be a buyer. Otherwise, I got to wait. Very likely space comes down into this $15 range, man. It's probably coming down into here. And the RSI is, there's still room it could go down, man. It could go down. Space could go lower. So I wouldn't get aggressive with it here. I'd just wait. See what happens. We saw some of the EV pops. I don't know, man. The thing is, a lot of these penny stocks, these growth stocks, these biotechs, they've been in a buck and bear market. Everybody keeps talking about, the market's overpriced, market's overpriced. I don't know what the fuck you're watching. There's plenty of stocks that have corrected, man. Market's overpriced, but Facebook is sitting at the 200-day moving average. So does that look overpriced to you? It doesn't look overpriced to me. Go look at Dow component, like Dow. Where's that? Does that look overpriced to you? That doesn't look overpriced to me. That's below the 200. I can show you stock after stock after stock after stock after stock that's sold off below the 200 that is down. So all these people talking about the market's overpriced, I guess you're talking about the 5 fucking stocks that make up the indexes: Google, Microsoft, Apple, fucking Tesla, and one other. Like, is that what you mean by the market? Because the market that I look at, a lot of them are underpriced, man. Does Uber look like it's overpriced to you? It doesn't look like it's overpriced to me. So when a guy says, well, the market's overpriced, I don't know what you're talking about or what you're looking at, but that looks underpriced to me. It's been in a downtrend, right? We got tons of these. Go look at Path. Like, these are growth plays. Does that look overpriced to you? It doesn't look overpriced to me. It's been in a downtrend. So, when people are saying the market's overpriced, what market are you talking about? Are we talking about the indexes only? Yeah, well, 5 companies that make up that index are going up. I mean, okay. But that's not the market. The market is made of 5,000 stocks, man. So it's that's TV stuff, man. There's a lot of stocks that have been corrected. We had retail stocks. Now they're starting to move back up, though. Look, Walmart. So our Christmas trade, Walmart was on that list. Best way to identify sector rotations. What I just showed you. So how did we know retail was about to rotate? It sold off. That right there, stage 4 decline tells you it's rotating to the downside. So down comes retail until where? It's going to go to where it was before. And where did it stop? Right where it was before. Right? And then what puts in a box, there's your buy zone. Where's our target? It's probably going to go where it was before, previous high, there and there. Right? So that's Walmart trade. So you had to get ahead of it. You wanted to be plotting that on the way down, right? So right in here, you had about a 1 week window to start making your trade there. That's a rotation. And then the rotation is price breaks above. So the market rotated, man. And you can see this in oil. So if you come to my newsletter, and the newsletter isn't just for me, man. Like, I'm trying to give you an example. Hold on. Watch this. So if you come here, market status, this is what you should be looking at every day. So every day I'm looking, where's the S&P 500? It's pretty close to an extreme RSI. When that RSI goes extreme, you know what that tells me? Price is probably going to stop going up. That doesn't mean stocks are going down, but it does tell me the big cap stocks are going to stop going up. Where's gold? Where's oil? Where are bonds, right? And where is Bitcoin? And so I want to be looking at all of these all the time because that's going to give you incredible insight into what stocks. So what are bonds? TMF. So you should write that down. You know, the Peters Report is for me, man. A lot of people think I do it for you. I don't do it for you guys. That's for me, man. I put that shit in manually every day for me because that's what I'm doing, man. And so if I come across, where's this? There's engine, right? The guy was like, remember that guy earlier? He's like, yeah, that works in the past, but how does it work in the future? Well, bro, we're taking the repent forward to the future. So big sell off, and this is where we were buying. What? First target 210, second, we just trimmed at 297 because it ripped. So there, this is where I was trimming, right? This was profiled on the podcast, taking it down. Why? The RSI went extreme. That's the money flow rules, right? Now what? I fully anticipate it comes back. It's probably going to build a stage 3. So I'm putting these charts on here for me to tell me what was I thinking when I bought it, you know, Roku. And then these are all of the stocks that I'm tracking right in here. So every day I'm watching these. It doesn't mean I'm not watching others, but I'm watching all of these for possibility of trade entries. You know, a lot of these are mixed, penny stocks, blue chips, growth. Most of these are growth plays, right? So watch this. If you come to the back, this is my buy and hold. I don't text a lot about these or tweet a lot. I kind of anticipate you know what to do with these if you have the money flow or if you understand the money flow. And so my buy and hold is made up of like 3 or 4. It's actually 4, technically 5. I don't have one of them on here, of buy and hold accounts. And these are the dividends that come off that account. Nothing, it's not massive, but they're slowly growing, right? Comes out to about 17 grand. All these ones you see in red, I'm looking to buy more. I may not be able to do it today, but I scan through my list, and that means I go look at Pepsi, Esso, Verizon, MF, AG&C. I own these. Buy and holds. So what I'm looking for is the ones that are on sale. And the ones that are on sale, if I have money, or some of them, maybe sometimes these dividends, I'm looking to allocate it to these stocks. So like AG&C just went red. It was off red, but now it's red again. Why? That doesn't mean I'm buying that day. It means I'm looking for a chance to buy, which means what? Stage 1 boxes. So boom. AG&C came back down into the box. Remember, it broke out, and I was buying all these stage 1s. This pays an 8% dividend yield. So if I have money, I'll buy a couple shares, as long as it stays in that zone, right? So what was some of the other ones? So as you're looking at these, MO just got crushed, right? The cigarette company. Now, I know some people buying it immediately. I'm not buying it immediately. Why? It's still going down, bro. Let it come down. Let it stop. That's a broken family. It'll come down, and then it'll stop, man. Look over here. Sold off, and then it stops and starts going sideways. That's when I want to be a buyer. Right? When would I want to be a seller? Well, if I was looking to sell, I'd want to trim it on the extremes, right? So let's say that after a while, the position gets too big, and it becomes very, very, very large in my buy and hold. Well, that's a good spot to trim a little and push it to something down here, right? And so then you can begin to look at your buy and hold like it's called portfolio management is what they call it, right? And so you're constantly looking, and it's not as time consuming as it seems. As you watch these stocks that are in your buy and hold, you're going to see some on sale. So maybe you're going to trim one and maybe use those profits to buy a little bit of Starbucks, but you wouldn't buy it if you have plenty of it. So what I'm trying to do is usually target the newer positions. So if you look on here, the last one on here is Hasbro. Well, I try to add 1 or 2 stocks a year to my buy and hold. That's it. 1 or 2 a year. That's it. 1 or 2 a year. When am I adding Hasbro? At the bottom of a stage 4 decline. Well, what if I only get like 20 shares and then it breaks? Well, I can't buy it now. It's past my buy zone. So I was buying in here, bought on the breakout, bought in here. Now it's running. I'm done. I bought all I'm going to buy on this money flow cycle. Well, guess what? There'll be another stage 4 decline down the road. They'll miss earnings, CEO fuck up, something will happen, they'll get a stupid toy, and it'll come down. And when it comes down and goes sideways, it'll be back on the buy list again, and I'll hold it for the rest of my life. And so as I watch oil go up and down, and I watch steel stocks go up and down. So if you look over here, where is it? Which one is it? NUE, right? NUE is the steel stock that I have. So what I'm trying to do is get exposure to different shit, There's some tech, there's some bio, there's Walgreens, CVS, there's Merck, Coca-Cola, there he goes, right there, NU. There's Duke, Southern. These are what? This is different businesses across different sectors in the economy. And any given day, one of these is fucking up. One of these is in the shitter. One of these are down. So if we go look at Delta Airlines right now, where's Delta? So as I allocate new money, right? As I allocate new money, this is the advantage you have over an index-only person. Well, if you're an index-only, all right, you're buying the index. Good for you. But now, because I own different stocks, I basically make my own index. These are big cap stocks. They're going to go with the flow of the market. What I'm going to try to do is take advantage of the shit that's not going with the flow of the market. So has Delta Airlines ever been here before? Yeah. And it stopped there again. Look. Oh my God, what a big surprise. And the guy said, oh, that's in the past. How can that operate in the future? I know. They tell you past performance is not indicative of future results. Okay. Well, I don't know what to tell you then. So in the past, long time ago, I wrote that and put that little pattern in there. And then today I still use it. So I don't want to buy up here. That'd be dumb. I want to buy after it sells off. And then I want to go look and say, okay, how much is Delta Airlines worth? I don't want to add to my portfolio if it's overvalued or whatever. Well, they say it's worth $52. Remember I said I like 30%. Now, I like that number. I like 30%. So as I come over here, it's under the 200. It's selling off. It's stopping where it stopped before. It still could go a little. It's not quite extreme. But I'm waiting for this box to build out, right? So then I could start adding to Delta inside of my portfolio. And what if Delta just fucking rips, man, and runs all the way to like 60? Good. We could trim a little. And add it to something else. Or maybe we don't. Like if Hasbro runs, I only got like 30 shares. I mean, if it runs, I'm not trimming it. That's a key point I just said to you. The goal is to accumulate and use the money flow, use the stages inside your buy and hold to build them larger and larger, not to look for an excuse to get out. So if a stock runs on you, let it run. We'll get to it next year. We'll get to it in 5 years, whenever. You remember Iron Mountain? That was one we put out, a year ago in the money flow game? And what happened? That bitch took off, man. It got cheap. And the reason we added it to portfolio, it was an undervalued dividend stock. And the moment I bought it, I got like 70 shares. It just took off and never looked back. Well, guess what? I got to wait, man. Am I going to trim this? No. I didn't have a big enough position. I only bought $2,000 worth. Right? So I want to trim it when it's like I bought, over time. I slowly built it up. I got like 10,000 and then it just runs. Then I want to trim it, man. Pulls back, anything. I'm looking to buy more here, And maybe after the 8th or 9th or 10th money flow cycle, maybe it's time to trim it back. Maybe your gains have gotten exponentially large. And so some of these literally just come off of the money flow. And you say, what do you mean? I'm not buying anymore. The position's too big compared to everything else. And so I just leave it be. Like BX, I'm up like 50 fucking grand. Like it's an amazing amount of money. I don't need to allocate any more money to this. So I'm just letting this be. Just do what it's doing. And I take new money and I put it into better, what I think have better opportunities, better upside. SBX. Yeah, it's too soon on Starbucks, man. This is day one of a break. This is day one of the sell-off, bro. Man, oh, you guys are premature. It's premature, bro. It's too soon. You gotta let it put in a stage one. So we gotta do our stage one. So anyway, that's what the money flow's about. That's how I use it inside my buy and hold, man. I got a little video over here. I've had it in here for a while, if you haven't watched it, on how I use the dogs of the Dow to kind of do this. Yeah, of course you would take some off on Tesla. You know that. You know the answer to that when you ask me. Don't ask shit. You already know the answer. You already know the fucking answer. Your spirit told you the answer to that, man. Your spirit told you that. You already knew that. It's extreme. You know that. Take a little off and let the rest run, man. Let's see. That's gush. You already knew the answer to that. One good thing about, I know most of you wouldn't do this because it involves a lot of work and most people are lazy traders if they were being honest, but taking a chart and putting it into a folder of some kind, or I used to print every trade off. I'd print them off. I'd write on it. I'd set my things and I'd go through it. I highly doubt any of you do that. I highly doubt you do. Most people don't. So I do this for me. So look at in ENVX went right to where we thought it would go and then just stopped. So when we got long right here, that was my target, previous high, and now we're hitting it. Now we're hitting it. Do you do it? Most people don't. Most people are lazy. They don't track it. They spend more time on Reddit than building their trading log. CHGG, man. I don't know. Maybe. Yeah. I mean, you got a reversal candle. It's kind of a box. Yeah. I would nibble though, bro. I would nibble. I like it though. I like it. Man, shut the fuck up about CHGG. You know what it is. It's a runaway stage 4 decline's what it is. I'd wait, man. I don't know. You could nibble here. It's pretty undervalued. Let's see. But these stocks are not getting any love, man. These stocks are out of favor, dude. $100 target. Come on, man. Yeah, I would nibble. I wouldn't back the truck up or anything. You know, I'd rather wait on a... Just nibble on it, man. Just nibble on it. I don't know, man. You might make a run at it. Earnings, again, I don't really pay attention to earnings because it turns you into a gambler. Well, I'm going to play earnings. I'm going to buy something. And that's cool. I'm personally just trying not to do that. I try to trade smart every day. Just go in on what your thoughts on Manacoin. I'm selling Manacoin, man. What do you think, man? What the fuck do you think your thoughts are? What do you think? It's gone straight up 200 and 300% in 2 days. What do you think? You think you should buy it here? So your buy was right here. Right there. There's your buy zone. So you're late. If you're looking to buy it now, you're a dipshit. That's when you should have bought it. Here was your breakout. You had another chance right here. If you bought it after this, it's because you're a complete dipshit. And I'm just being honest with you. Someone needs to tell you the truth. So if you're looking at buying it here, man, your mother messed up. They shouldn't. This are the suckers. These are all suckers. Moment this turns green, these are all suckers. That's what you call them, man. Suckers. So when you see your friend chasing that shit, just say, hey, what's up, sucker? That's your new name. You're a sucker. This is where you're trimming it. This is where you're selling it. So that's what I think, because that's what I did. I trimmed it. I think the game is to buy low and sell high. Now, I'm assuming you did that, sir. I'm not picking on you. I'm trying to make a point for everybody listening. So when you see these coins and they've rocketed up, you weren't in it. You should have been in it beforehand. So what I do, if you're new to crypto, what I would recommend you do, go buy a little bit of the top 5 coins and then start to branch out. And so what I do is I come over here as I have money to allocate to crypto, right? That's what I do. I have them all in a list, right? I click view all and I start going through the list, right? Is that a buy? No, right? So yesterday, store was breaking out, but I had a full position, so I didn't really do much. But if you're watching it, let's go to that one. STORJUSD. Look, right there it was breaking out. So yesterday, you got a clear signal, moved above the 20, breakout, and then did we know that was going to happen? No. But before this happens, it breaks out. Just like it did over here. Broke out, runs up, man. I don't know, man. I don't chase these tokens, bro. So I go through and I buy and I put together a portfolio and I'm not worried about selling. So you remember in the last crypto sell-off, I didn't sell any crypto. Why? Because of today, man. The reason I didn't sell any then is I didn't have enough to sell, man. So it's going to take you a year. This is a huge part of people miss with the money flow. It's going to take you a year to even build out your portfolio, to build out your stocks, to even have enough positions where you can even start taking money down, man. Everybody thinks trading is about putting 10 grand in an account, buy stock, it moves up, sell it. Buy. That's just one type of trading, man. That's one type of trading. But, you know, if you're position trading, which I'm doing just fine in crypto doing that, is I build these positions out and I'm looking to add on stage ones. Why? So when they explode up, then I can sell some. Takes time, bro. It's going to take you a year to build out a crypto portfolio. And then it moves and people want to sell it. They got $100 of it. Man, don't fucking ignore it, man. Let it come back. The game is to build it up over time so that when it rips, you have a little money to play with, man. It's not all in, all out. I don't know. That's a whole nother class, though, man. That's it. That's all we got. That's a whole nother class. All right, man. Yeah, Filecoin's probably next. I don't know why that thing is not going, dude. I almost moved all of my Filecoin yesterday into Storecoin, and that didn't. But look, it's setting up, bro. Look, it's pushing above the 20. You better get on that, man. I would just hold my Cardano. Everybody hating Cardano makes me like it. Oh, you guys that turned on Cardano, bunch of bitches. I got people in my own group turning on Cardano. It's gonna rip, man. Why you guys turning? Probably should be a buyer here. Yeah, I would not be buying ETH or Bitcoin right now. I like Cardano because everybody hates it right now. Yep, there's a lot of coins set up, man. If you see one particular type of coin break out, you should go look at other similar coins. That's just obvious, man. Store broke out. I would be looking for Filecoin to break out. So, yeah, I'd be a buyer of Cardano. Everybody hates it, man. So I'd be looking at being a buyer. It stopped here 3 times, man, if we draw the line. So, sold some Anchor today. I've been building that one for a while. Is it still up nice? You know, I don't know, man. These things explode and then they come down. So sold a little bit of that. I'm still in Cardano. I haven't started buying, but I'm actually probably in about a position where I'm thinking about time to start buying some Cardano. All right, man. You guys be good. What's up, YouTube? Yeah, you're more than welcome, bro. USA's cut to pay them. We got trolls. I only got one monitor, so I couldn't really watch. I don't know what's up with this J guy. I'm fixing to block his ass, though. Yeah, we just move his ass. All right, man. You guys be good.